Hello YouTube. Today we are going to discuss the Q4 earnings of Hims & Hers, telehealth company. Hims stock is up more than 400% since last September and up 20-fold since 2022. We're going to do so by going over the following points: revenue, gross margin, free cash flow, assets, outlook, earnings call, valuation and the technicals. And at the end I will give my conclusion. Please remember that this is not financial advice and I'm not your financial advisor. Let's jump into it. First point, revenue growth. The company had a revenue growth of 1.5 billion, up 69% year over year in 2024, and subscribers grew to 2.2 million, up 45% year over year in 2024. Here we can see the revenue of 2024 and 2023, the last 3 months and the full year. Revenue-wise, the company is doing pretty good. Second thing is the gross margin. We can see the gross margin is a little down compared to last year, 79% compared to 82%. This is not shocking news, and as expected, as the company's management made this call a few quarters back. Normally, I wouldn't invest in a growth stock with a gross margin under 40%. The higher the better. So the second point is also looking good. Free cash flow. Free cash flow is almost 200 million. This is very healthy and for the company and a good sign it is managing its money the right way. The assets. We see the assets have been going up as well as the liabilities. This is not a huge problem as Hints doesn't have high debts. The cash also went up. Then the outlook. Hims is a company that always presents an outlook for the next quarter and the next year. Not all companies do that. Here we can see the full year guidance is revenue in the range of 2.3 billion to 2.4 billion. This is growth of 53%. This is a little lower than we are used to for Hims. It's a sign the company is getting bigger, which makes it harder to grow with triple digits every year. The earnings call. In the earnings call, CEO Dudem and the CFO were talking about the new projects on the line for Hims, such as testing for low testosterone and a further implementation of AI on the platform. Most important was what I said about weight loss. Since the shortage of the rivals are over, Hims is no longer allowed to sell their cheaper version of Ozempic. However, Dudem and the CFO said they will launch their own weight loss product later this year. At the end of the call, analysts can ask questions. Most of these questions were about semaglutide, the weight loss drug Hims was selling. This shows analysts are somewhat worried this will affect revenue too much. The CFO said weight loss will account for more than 700 million of revenue this year. And here we can see those questions. I highlighted them in yellow, all about weight loss. Valuation. I made a valuation for Hims. I used the EV revenue multiple for the stock based on the future revenue for 2025, which is $2.3 billion. We can see the valuation has been going down from over 7 to less than 4. And last year this ratio was in low 2s. I think a ratio in the low 3s makes it undervalued. The highest price I would buy is around $34, $35. Last but not least are the technicals. We see Hims has seen a huge rally mostly caused by a short squeeze, pushed the price significantly higher, with the top being $72. Since then the price cooled down with drops of 20% per day. If we look at the technicals, we see a support line around $34.5. And if we use the Fibonacci retracement tool, we can see the 0.786 level is also around this support level. This makes it a good first level to DCA. Conclusion: Hims earnings were good, except the fact that Hims can no longer sell their cheap weight loss drugs. That scared investors, and this can be a reason why stock lost more than 50% so far. The highest level I would personally buy is around $34.5. Remember, this is not financial advice, and I always do your own research before you decide to buy anything. Don't forget to like, comment, and subscribe, and let me know in the comments what you think about this presentation style. Also, let me know if you have any stock you want me to research next. Thanks for watching.